Hello dear traders and welcome to InstaForex TV channel. You're watching a weekly link up with me, Anna Kasatkina. Let's discuss the ongoing situation on Forex with technical analyst Peter Yakimovic, and we'll try to forecast further moves of popular currency pairs. The US dollar is set to close on Friday with its best weekly gain in 3 months. Market participants have growing expectations that the US economic recovery will outpace other advanced economies. Such confidence comes from the latest portion of upbeat macroeconomic data. On Thursday, investors found out that both initial and continuing unemployment claims in the US declined last week. This welcome news ahead of the publication of the US non-farm payrolls gave investors hope that the employment data for January would be also strong. So the US dollar has got its second wind. Do technical charts confirm the bullish prospects of the US currency? Let's ask our technical expert Peter Yakimovic. Hi, Peter.
Hello, dear traders. I want to start with the euro-dollar update since my previous forecast. Basically, there is a good progress since we called the last week. There is a potential for the more downside on the euro-dollar. Basically, we identified the head and shoulders formation, the multi-month head and shoulder formation on the daily time frame, and actually there was a breakout of the neckline this week, and I think the euro-dollar got potential for more downside. Overall, I see the pretty condition which favors basically the dollar strength, and meaning that euro dollar can go lower, probably 1.1810 level. So area around 1.1800 is a great level for potential to exit potential selling positions, because basically that is a projection of this head and shoulders formation on the daily time frame. There is also, in terms of the volume analysis, I saw the strong supply enter the market like last week. So probably there is also supporting money from the bigger players for the larger time frame money, as we want to say. And combining the volume plus the breakout of the multi-month head and shoulders formation on a daily frame. So this is basically a pretty good condition for the further downside and eventual test of the 1.1810. Under this condition, preferable strategy will be basically to sell on the rallies using 4-hour time frame, 2-hour time frame, and watch potential further drop on this currency pair.
Meanwhile, the pound sterling is trading without a clear-cut dynamic. Earlier this week, the sterling was drifting lower, but a policy announcement by the Bank of England pushed the British currency back to the previous trading range. Do you think the pound-dollar pair will be able to escape the range-bound market, and in what direction?
On the British pound versus US dollar, nothing spectacular changed since my last forecast, but it's actually even doing more and more. This rising wedge is actually became a very, very important pattern right now to watch. And I think we got to break out this rising wedge. It is a sloppy breakout. It didn't show any spectacular supply actually that entered the market. I think there is a still overall chance for this big rising wedge that is forming for many months, basically to develop into the one strong downside move on the British pound dollar versus US dollar. Basically, the Bank of England left rates rate unchanged, so there is no major surprise on that aspect, the fundamental aspect. So I think that you carefully watch if you see the strong supply. We got a technical breakout of this rising wedge, so I prefer more to the downside and watch for example, some selling on the rallies or something like that, and eventually watch for the downside targets at the 1.3465, and the bigger down target will be at 1.3200 level. So again, rising wedge, breakout of the rising wedge, and on the daily time frame, it can be a huge pattern for the further downside.
And let's finish our link up traditionally with your comments on gold.
On the gold, basically to just update on the previous forecast, we expected the gold to go down. Strong supply entered on the gold many days ago. Market basically gold went into the neutral stance for many days, and then we can see that there is a continuation of this downside pressure on the gold. So I would be surprised if we can see the level like a 1764 to be on the test, which is a basically low from November 30th, right, last year. And then the next downside target can be all the way down to 1720 level. So from technical perspective, I see no evidence of any reversal yet. So probably watching on selling opportunities on the rallies. and eventually expect that low to be on the test at 70.64 will be something to watch. Speaking of the near term on this market. And additionally, there is a breakout of the 200-day moving average on the daily time frame, and also the other moving average is starting to slow, also just started to slope downside. So that is also another indication that basically there is a maybe swapping in the money from the buyers to the selling side.
Thank you, Peter, for your trading analysis, and see you next week. You've watched the Linkup on InstaForex TV with me, Anna Kasatkina, and Petar Jakimovic, technical analyst of InstaForex. We wish you always profitable trading and see you soon.